When it comes to passive income, dividends are one of my favorite sources. Of course, if you could significantly increase those dividends, they would be even better. That is the goal of a covered call ETF, and we are going to be checking out some of them in this video. We will begin right now. A covered call ETF is basically the same as any other exchange-traded fund, except some of the underlying assets are utilized with a covered call strategy. This strategy will hopefully make additional income that can then be used to increase the dividends given back to the holders of the ETF. A covered call is a transaction whereas the holder of an asset sells a contract that guarantees they will sell the stocks to the buyer at a specific price called the strike price. The buyer pays a fee, called a premium, for this contract. If the asset reaches the strike price, then the buyer has the right to buy the asset at that strike price, even if the asset is worth considerably more. The seller gets the strike price and keeps the premium. If the shares never reach the strike price, the seller keeps the shares and the premium. Thus, a good covered call strategy is a solid conservative method of options that can be used to make more income. We will deep dive into covered calls in a future video. For now, let's look at some of the top covered call ETFs. I have selected 10 of the higher yield ones, 5 are from Canada, and 5 are from the American market. So without any further ado, let's start off in Canada with our number 10 pick. We are starting off with BMO US Put Right Hedge to CAD ETF, which has a ticker of ZPH. They are invested in U.S. large cap equity securities, and they use call options to generate additional income that can keep their distributions on the higher side. Their yield is 8.021% that is paid out monthly in the form of 10 cents Canadian per share. Their management expense ratio, or MER, is 0.65%. In terms of growth, this is not really an ETF you are going to get any sizable growth from. It is all about the dividends on this one. At number 9, we have our first American ETF, and it is Nationwide's NASDAQ 100 Risk Managed Income ETF with a ticker of NUSI. They utilize covered calls with their investments in the NASDAQ 100 to give a little more with those dividends. Their yield is 9.198% that is paid out monthly in the amount of 16 cents USD per share. Their management expense ratio is 0.68%. They have no growth over the last year, and honestly, this is one for the dividends. Coming in at number 8, we have Hamilton Enhanced U.S. Covered Call ETF, who has a ticker of HYLD. They are using covered calls to maximize their investment within the Selective Covered Call ETF index. They are a brand new ETF, so obviously one you want to watch if you hold until they have enough time to build a little trust. Their dividend yield is 9.952%, which is pretty good as it is paid out monthly in the amount of 13.8 cents Canadian per share. Their management expense ratio is high at 1.37%, but with a pretty good dividend, it is arguably worth it. I would also suspect as this company grows a little, that management expense ratio will probably come down in the future. As for growth, they are really too new to provide any real data on growth expectations. For number 7, we will jump south of the border for Global X S&P 500 Covered Call ETF with a ticker of XYLD. They invest in underlying assets of the CBOE S&P 500 Buy Right Index. They have a very solid yield of 9.742% that is paid out monthly in the amount of 50.1 cents American. This is a good stock to keep in your Wealthsimple USD RRSP for sure. Their management expense ratio is 0.60%. not a lot of growth, as their ROI over the last year was only 2.3%. I'll say it again. They are only here for the dividends. Back up to Canada for number 6, which is the CI Tech Giants Covered Call ETF with a ticker of TXF. They invest in the 25 largest technology companies in North America and use covered calls to boost up their investor distributions. They have a yield of 10.076% that is paid out quarterly in the amount of 59.4 cents Canadian per share. Their management expense ratio, or MER, is 0.71%. They had some growth in the first half of the year, but have slid a little since then to really end the year without much to show other than a fantastic dividend. In at number 5, we have another American ETF, and it is Recon Capital NASDAQ 100 Covered Call ETF. They have a ticker of QYLD. They utilize covered calls with their investments in the CBOE NASDAQ 100 Buy Right Index to pump up those dividends a little more. Their yield is a very nice 12.039%, which is paid out monthly in the amount of 21 cents American per share. Their MER is not bad at 0.60%. There's no real growth with this one, which by now should almost go without saying. We are staying in America for number 4, and it is the Credit Suisse X-Links Gold Shares Covered Call ETN, which has a ticker of GLDI. Their investments seek to replicate the Credit Suisse NASDAQ Gold Flow STM 103 index using covered calls to really improve their distributions. Speaking of distributions, their yield is 14.56%, which is paid out monthly in the amount of 16 cents USD per share. Their MER is 0.65%, and like most of these ETFs today, growth is not their forte. We are back to Canada for number 3, and it is the Purpose Bitcoin Yield ETF with a ticker of BTCY.B. This is Purpose's spot Bitcoin ETF that also utilizes covered calls to increase their income and thus provide a very good dividend even when crypto is misbehaving. Their yield is 14.719%, but keep in mind it can change quite a bit with the volatility of the crypto market. That dividend is paid out in the amount of 7.7 cents Canadian per share. The management fee is 1.1% and is a little high, but perhaps it may be worth it, as there is definitely growth potential with this one in addition to the dividends. In at number 2, we have the second of our Purpose ETFs with the Purpose Ether Yield ETF, which has a ticker of ETHY. They are a spot Ethereum ETF that enhances their yield by use of covered calls, which allows them to make profits even when the market is not being kind to crypto. In fact, when crypto is hurting, their nice yield is even nicer. Speaking on that yield, we do have a yield of 19.556% at the time of recording. That yield is paid out monthly in the form of 8.1 cents Canadian per share. Their management fee is 1.10%, which is, just like with Bitcoin, a little high. However, the potential for growth in the crypto market will make this not only a good dividend, but also a potentially good growth position too. For number 1, we are heading back to America, and this one is a doozy. We have Credit Suisse X-Links Crude Oil Call ETN, which has a ticker of USOI. This ETF utilizes covered calls to maximize the returns on shares from the Credit Suisse NASDAQ WRI Crude Oil Flow STM 106 index. They have a mind-boggling yield of 21.335% that is paid out monthly in the form of 19.6 cents American per share. I do have to caution that their dividend does get adjusted a fair amount based on the market conditions. In March, their dividend was 11.2 cents USD per share, and it was 17 cents USD per share in February. Full disclosure, I would not buy this one personally, only because I am not a fan of fluid returns. Their management expense ratio is 0.85%. They did experience a small amount of growth over the last year, as their return on investment was 13%, not including dividends. It should be pointed out that despite the fact that covered calls are a more conservative approach to options, they do come with slightly more risk than your standard ETFs. If any of these ETFs look like something you are interested in, then be sure to do your due diligence. This video is only the start of your research. A financial advisor is the end. If you guys loved this video, be excited, there is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.